Hey everybody, this is Jose here. We are about to start around 40 seconds from now. So this would be a sound check. Please go ahead and confirm that you hear my voice with just a quick message on the chat box that we do. A quick hello, that would be good enough. Thank you so much. 20 seconds to go, guys. Wonderful. Thank you for confirming sound is okay. And that way we can just start now, okay? So 5 seconds, almost the right time to begin. Here we go. We just got to the top of the hour, so it's time to start. So just maximizing the introduction slide here so we can have a proper introduction for the session. So welcome everybody, official welcome. Today it's September 19, 2019. My name is Jose Blasco, I'll be your guide. And today I'm guiding you in the world of longer term trading, which means that we're gonna be looking at trading opportunities that are above and beyond intraday, which means that we'll be looking at trades that typically will last a few days, maybe a few weeks, something like that, even though of course we'll be open to identify anything that is tradable and of a high quality. Okay. Before we start, disclaimer, the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive when using our products. And that takes care of the introduction. And therefore we are ready to start, okay? So nice to see you all. I see all your messages on the chat box and everyone here. It's lovely to join you for the 1 hour get together session. And let's begin, okay? I remember last week we had a little bit of a drop in volatility across the board. We were struggling a little bit to find opportunities with higher premium levels. But today, when running the scan, notice how I am pointing at the non-directional trades at this moment in time. And when running on the scan, we did come up with multiple opportunities, more than last week. And it's looking like some volatility, some premium is coming into the market. And therefore, that may be equal to opportunities for us to execute. Okay, we're gonna have to run our trading process, do the proper assessment, the proper planning, and if the opportunities match our rules, then we'll take the trade. If not, then we'll go find a new one. It's that simple, okay? So again, for some of you that may be joining the session for the first time, I am pointing at this section on the screen with a scanner, where on the top, you can see we have directional long and directional short opportunities. DBT stands for debit. So we're gonna be using option strategy where we basically buy options, typically spreads. Last weekend, by the way, in the sharpening session, we covered diagonal spreads, which is a new type of option strategy that we haven't used yet, just because we are learning to do things one step at a time. And we'll be incorporating that little by little, okay? But also in the bottom part, notice how we also have 3 cases of credit option strategies, where basically we'll be selling options, collecting premium, and waiting for time to pass until we reach the expiration date, and therefore keep that premium in the form of a profit, okay? We also love to do that. We actually love to do both. And in the world of credit spreads, though, because you make money on things other than directional moves, we have 3 types of opportunities instead of 2, which is the purely non-directional trades, okay? Normally we execute iron condors. And then we also have the neutral long, neutral short, where normally we are running credit spreads, vertical credit spreads for those trades. So we'll be exploring all of it. And as I almost always, I will also start today looking at the purely non-directional opportunities in the market, and hopefully we'll find good ones and we'll just go for it. Okay, that's the plan. So here's the list. We got 8 symbols in the list. Out of the bet, there are a few symbols I would like to discard. So first, XLU, I will pass on this one, just like XYG, I will also pass on this one. By the way, anyone would like to type on the chat box, why is it that I'm passing on that one? Probably you know, but just in case, just to get you, working with me as a team, as we always say, this is teamwork. So please go ahead and answer this question. Why is it that I am discarding XLU and HYG for iron condors. And also Pepsi and Coca-Cola are two stocks that we will also discard in today's picks for non-directional trades. Okay, so as well, why is it that I am not too interested in Coca-Cola and Pepsi? They're great companies, but why is it that I'm not so interested for iron condors? That's my second question for you guys, just to see if you're with me. And if you're not with me, I'm going to give you the answer, but it'd be good in this teamwork environment that you write it down, okay? So you are right, XLU and HYG are ETFs, and therefore, even though they are certainly valid markets to trade in many ways, when it comes to collecting premium in the form of credit opportunities, because they are ETFs, they have more diversification built in, therefore they have less risk attached, and therefore they have less premium. Therefore, if you were to collect premium from those trades, most of the times you will be disappointed after you plan the trade and realize, hey, I'm not being paid enough. So I'm not saying it's always the case, but I'm always trying to find this balance with efficiency and probability. And efficiency in this case, I mean the use of our time. So I'm not going to look into those opportunities, since we are likely going to do a nice application of the method, but then waste our time from the point of view of the trade is not valid. Okay, so that's why little premium, that's the bottom line. And Ruben, nice to see you, Ruben. Very, very nice to see you here, my friend. I also have GLD. Okay, so it seems that you have run the scan maybe at a slightly different time than me. And of course, there is moving data. The market is now trading in pre and pre-market, sorry, and therefore, the scan has picked up something that I don't have on my side. This could certainly happen, okay? But it's okay. GLD also falls into the category of ETFs, and therefore we would not use it, okay? And yeah. Alton, you are right. The reason why Pepsi and Coca-Cola are not going to be a part of our analysis today is because of the same as the ETFs. I mean, Coca-Cola or Pepsi-Cola are individual companies. They are not ETFs, but they are, let's call it, such stable companies because of the type of business that it's kind of, from a premium point of view, if you don't mind me to use a strong word, it's a little boring, and it happens as well. We've seen that before with also some utility companies such as T-Mobile, AT&T, all those companies are so stable because of the industry in which they belong that normally it is reflected on their premiums, unless something crazy is happening, which could happen. But again, I'm going to pass on that, okay? Anyway, so yeah, 30 to 45 minutes ago, Ruben, I hear you, my friend. Okay. Anyway, so let's go for it. We're gonna start with the first one. Also, when looking at those opportunities, I'm always thinking efficiency. I'm sharing all these thoughts. So when you do this yourself, without being together in the session, you can replicate it and be efficient. So I'm just sharing what I'm thinking in the back of my mind. I'm always looking at the column on the right and looking at the figures, and always my priority is to start with the stocks with a greater value. Okay, and the reason why is because, again, the higher the price of the stock, the greater the value for the options, because options are a derivative instrument, isn't it? And because we are selling, I plan to collect as much premium as possible. So again, we know options are priced based on many factors, not only the price of the stock. Okay, that's why the scanner is looking for, levels of being overpriced or underpriced, etc., etc. I'm not going to repeat myself from prior sessions, but the bottom line is that there is something that is for sure, which is the higher the price of the stock, the higher the value for the options. So, I always like to begin the trading or the planning with options of a higher value. Okay, so we'll start with BIIB. Okay, and also as well, I am bringing into the main screen Yahoo Finance, so we can check on earning dates. So notice how I'm looking here on the top, finance.yahoo.com/calendar/earnings. So we're going to be looking at that page, okay, to input the symbols of the stocks that we're going to use, such as Biogen, BIIB. So we get to see when is the next date for earnings, in this case, October 22nd. That's good because the current date is September 19. So from September 19 to October 22nd, there is plenty of time in between. and therefore we can certainly go ahead and sell options using 1, 2, 3 weeks out from now without having that earnings report happens prior to earnings. Sorry, the earnings report happens prior to expiration. That's what I meant. Okay, so looking good when it comes to the earnings date, but then when looking at the chart, the problem is that we do have nice green UFOs below price. We do have red UFOs above price, but they are so far out that, again, talking about being efficient with your time and not wasting time. So what you probably realize is that if you were to sell the 325 calls, probably is no way you're gonna get premium enough based on our rules, unless you were to use an expiration date which is far out, probably further away than October 22nd, and therefore we are likely going to waste our time. So of course, I know this out of experience. Let's say you happen to be a trader who is less experienced. Well, it's not gonna harm you to load the option chain and confirm what I just said, okay? But because I know it, again, I wanna provide you with as many trades as possible during today, as well as leading you into how to do this properly and sharing, you know, the concepts, the process, the thoughts with you. So I'll leave you these for you to confirm. You can do that on your own. Check the premium collected if you sell the 325 call, and you will see that you will need to go far out, multiple expiration dates, probably, very likely, way beyond October 22nd. Okay, so I'm not gonna do it, and then I'm just gonna move into STZ, which is Constellation Brands. Okay, and while that chart is loading here, so I am also going to confirm why those options seem to be so overpriced. Okay, is it because earnings are about to happen? And in this case, for that stock, October 3, okay, October 3 seems to be the next earning date. Okay, now the current date again is September 19. If I was to think about what is next Friday, it's on the 20th, that's tomorrow, and the Friday after is the 27th. So maybe I can use like 1 week from now, something like that. And if the chart setup allows me to, I may end up planning a valid trade for non-directional purposes. Okay, so let's see if we can do that. So first, what do we have? 51%, that's good. Okay, we normally don't want to touch it if it's below 50%, correct? So we got 51%, that's good. Now, I'm not gonna be happy enough until I check my pre and post market. So checking pre and post market, and the moment I do that, I can see my probabilities now are 46. What does that tell you? Well, this tells you that most of the institutions, most of the large market players dealing with STZ are placing their orders during market hours, regular market hours, and therefore we're gonna ignore pre and post market and plan our trade out of regular hours market data, okay, not pre and post market. Now, what's the problem here? I see a little problem. So we got that stock is trading 0.83% up during pre-market session, which means that when the market opens, is likely going to open around 209. That would put that particular stock in a location which is very close to the two red UFOs, okay, and pretty far from the below two UFOs. If I was to make it a rule and say, hey, I want two UFOs above and two UFOs below, notice how this particular potential range of price for the future, it's kind of in balance in the sense where we are very high up in the range. So what I would like to do is to look at longer time frames, such as daily, to see if there is more data on the left that may allow us to plan this trade. And notice how this is not a case where we are making all times high or anything like that. That's not the case. So there is data here from October 18. So what I'm going to do is I'm going to go back to my 55-minute time frame, my edge time frame, but I'm going to go ahead and double click to load data starting on October 2018 at least. Okay, and that way this should uncover some red UFOs that may be above price, and here we go, here they are. Okay, so we have red UFOs above, we have red UFOs below. So it seems that we do have a proper setup to plan the trade. Okay, so what's next? Well, we're gonna load Option Station Pro. Okay, and we're gonna use now pure mathematics to go ahead and measure what a statistical range should be. Okay, we're gonna do that. So let's do it. I am loading Option Station Pro, STZ. I'm looking at the clock as well. It's 9:14 in New York, which means that normally in 6 minutes from now, the option chain will reset. So we probably need to do this quickly. So I'm gonna right click anywhere on the chain, analyze and sell an Aaron Condor without even thinking, just so we can get into the analysis tab. I'm going to go ahead and add one more slice. Here we go. So, and what I want to do with my slices are, okay, in the middle we'll use last. On the top, I will want to use plus 1 standard deviation, and on the bottom, I will want to use minus 1 standard deviation. And what this very nice calculation is doing for us mechanically and automatically is looking at 27th of September as the expiration date. Okay, and please don't get confused on the upper chart because I have delta selected here. So if I change it to theoretical value, it will look like more something you are probably used to see, isn't it? So again, going back to the bottom part of the screen, expiration is 27th of September. Okay, and from now, where the current price is 209, to September 27, which is our expiration date, what the simulation is telling you is that that stock is likely to range between 202 and 216. So let's take a look at 216. Okay, well, 216 is somewhere here. So certainly, okay, if 216 is more or less here, so certainly that red UFO is a very good candidate for us to sell options above, because based on stats, we are not likely to surpass the purple line. But if we were to do it, okay, we have a red UFO likely going to bring price down and therefore not reach the options that we would sell above 224. So the question is, with that expiration date, how much the 224s pay me? Actually, we don't have 224, we have 225. And the 225 pays you only 8 cents. Well, that's not enough. We have a rule, isn't it? We want to collect ideally 35 cents at least when we sell options. Okay, and certainly if we had to narrow this down, the very, very minimum would be 25. So September 22nd is too close in time to provide the premium we need. So we will need to move to October 4, and October 4 using 225, that will provide 75 cents. That is certainly more than 35. So the question is, we know we get the premium we want using October 4, but what about the stats? Are the stats still in our favor? Well, I'm gonna move from September 27 to October 4 in the analysis tab, and when I do that, I will have a new value, recalculated value, that tells me, oh, wait a minute, now that market may move up to 224.7. Okay, and 224.7, it's actually above 224.33. Okay, especially given the fact that that stock will open almost 1% up. Certainly, it will not be recommended to sell options above this particular red UFO. But if 224.7 is going to be the new mark, we will need to be selling options around 229. And 229 is going to be 230, isn't it? Because we don't have 229, so it would be 230. And guess what? With the 230, we do get 35 cents. Okay? So this is looking correct. It's looking good for us to continue planning this particular trade and see if we get to an ending point, which is valid. Okay, so let's go ahead and begin typing here. So we're gonna buy a call and sell a call. We decided to sell the 230 call. That's gonna be how we begin constructing the Aaron Condor. Okay, and then of course somewhere below, somewhere below down, we're gonna have to sell puts and buy puts. Okay, this is how we will end up constructing this Aaron Condor. You have the call side above, the put side below. Now, the put side, let's go back to the stats. We need the put side to be at least below 194. Okay, so let's go ahead and look at the chart again. Okay, add a horizontal line around 194. Okay, 194 being here, well, it's looking like we will need to shoot for that 187. That would be the way to go. So again, back to the option chain to see if we have 187, and we have 187.5. and the 187.5 pay us 1.18, which is, one more time, more than 35 cents. So we're good. Okay, we're good. It's looking good, guys. For us to continue planning this trade, we will need to reconfirm all of this. In 1 minute, the option chain will reset, okay, and therefore we will have to go back and reconfirm everything, okay. But basically, initially, we would say that 187.5 and 185 is what we're going to use for the put side, and for the call side, we would use the 230, 232.5. This is what we would use for the call side. Okay, and this is looking like an iron condor, which is likely to be valid once the market opens. Okay, we will then confirm all of this and then plan a trade where our expectation will be that that stock will do whatever it does, okay, but remains between 187 to 230, something like that, anywhere from now until we said October 4, okay, which is the expiration date selected for now. Okay, that's the plan. Good. So again, 9:20 a.m. New York time. Market will open in 10 minutes. So this is the time where normally most brokers will reset their option chain. So all this data will be re-updated in 10 minutes. So instead of keep looking at non-directional trades, okay, I will come back to this section in the scanner later on. But what I'm going to do now is go back to the world of directional trading, because this has me use less of the option chain, more of the chart. So I will use these 10 minutes looking at the charts, confirming and validating if certain trades are valid for us. And if they are, again, 10 minutes later, we will also plan them. Okay, and hopefully we'll have a collection of trades to be executed as the market opens. Okay, that is the plan. Trades that you will have to decide to take or not, depending on multiple aspects. For example, what else do you have in your portfolio? Okay, if I plan a trade to go long, but let's say you already got 5 more trades in your portfolio where you're long, that may give you too much positive delta. If I plan a trade to go short, but you already have too many trades where you are being short, that may give you too much negative delta. So maybe you'll have to pass on those trades. And all of you, I would expect, have a different portfolio as we speak. So, I'll be assuming that all of you need all the trades I plan, but ultimately, please go ahead and look at your portfolio before you decide to take it or not. And same applies to executing those trades with real capital or paper money, and also the size, okay? Again, what I just said is common sense, but it's also important to be kept in mind, because if you are like me, I love to trade, and by default, if you ask me, I would love to take every single trade, but hey, risk management is more important than our passion for trading, isn't it? So we need to make sure that we are in the right place and we are safe. Great, so I'm gonna begin now with looking at the charts from a directional point of view. Please go ahead, give me a quick confirmation on the chat box that my pace in the session is okay. If I'm going too fast, please let me know. Of course, I try to be as efficient as possible with the time, in the sense that today is a trading session. At the same time, I don't want to have anyone getting lost just because I went way too fast. So please give me a little bit of a confirmation if everything is going well. I'll take a sip and I'll be back with you in just a sec. I hear you, Dirk. Love your sense of humor, my friend. Very good. Thank you, guys. Thanks for confirming. Okay, so let's go for directional. So what do we have in the world of directional tradings? Okay, and here again, the scanner is giving us all this list, which is absolutely valid. But also, I'm gonna do the same thing I did before. There are certain opportunities by default I will discard. So for example, XLB, XLF, I will discard their ETFs. Google, we can certainly go for it. It's a fantastic stock to trade, but I would expect that the majority of traders prefer, especially if you are in learning stages or kind of like stabilizing your trading methodology, probably using stocks which are $1,000+ per share probably is not ideal, in the sense that only one contract would produce probably too much risk for that account. Okay, so I will pass on Google too, even though you could certainly apply what I'm about to do. EFA is another ETF, so we'll do the same. Okay, and also stocks which are like AMRN, $16 a share. Then the opposite is true. For these trades to produce enough profitability, you may have to use, a bunch of contracts, and then you get the profitability, but you also have to pay lots of commissions. Okay, so normally again, I like to look at stocks first that have a higher value. Okay, 100 plus, $200 stocks, things like that is great. Of course, $50, $70 is fine too. But I'll start with that price range, and therefore my first pick is gonna be Facebook. So we'll be looking at Facebook stock and look at what is that market offering us. Okay, so click on Facebook. We can see climate is up. Okay, we have one sapphire color dot. When Facebook goes up, typically it takes 7 candles going up. This is candle number 1. Of course, when the market opens, it's going to be candle number 2. In other words, if we catch this trade, we are catching it from a pretty good beginning. Okay, and that's the way to do it. Okay, that's the best way to do it. So I got my chart loading here, PD for pending data. I'm just gonna wait for this to finish loading, and now it's loaded. We got 50%. Okay, that's okay. And then we're gonna look at pre-post market, and with Facebook we got 54%, and that's better than okay. Okay, so what are we gonna do? We're gonna plan the trade using pre and post market data, because AutoUFOs is revealing to us what's happening behind the scenes, isn't it? And you can see how the most relevant pile of orders are actually placed in pre and post market data for Facebook. So we're gonna join those pile of orders, those unfilled orders. Okay, so now the average, it's at this moment in time as we speak, is 187. Facebook will open slightly up, so I would expect the average to be in between 187 to 188, something like that. Okay, now problem, at that price level I don't have a green UFO. Okay, at that price level I don't have a green UFO. You can certainly switch to regular session to see if you have one. Okay, we don't either. Okay, I'm not a fan of doing that. I'm just giving you one more choice. You can also do that. Okay, normally I have not done it. I have never done it. I have shown it to you, but I never done it to plan a trading sessions. But I'm just giving you one more choice, just in case you have a very limited watch list of stocks. Okay, so therefore you will need to wait. Okay, you will need to wait in the case of Facebook for something like this to happen. Okay, so maybe you would have later in the day. Every candle is 55 minutes, right? So maybe later in the day you had some move or something like that, a new UFO form around 188, 187. We don't even need to be precise, because stocks are fragile, they're influenced by many other external forces. So we don't need to be precise, but obviously 185 is far away from the 187, 188 mark. So you would need a new UFO to form, and the moment price comes, then you would take a trade expecting Facebook to go up, okay, which typically would be like a 7-day trade or more. Okay, but anyway, keep that in mind. We may come back to check. It's not looking like we're gonna have a UFO at the open, but we'll check anyway. So my second pick would be Lulu. Okay, and by the way, I believe that we have a trade running with Lulu, isn't it? So we took a trade some time ago. We got into a trade with Lulu. We purchased a 210 call. Initially, the market started moving against us, okay? But there was a moment in time where the market started moving our way. And as you can see, even though when I execute my trades here in the session, and I'm using a SIM account, isn't it? So I'm using market price, which is something you never want to do. Well, still, now the trade started being in the profit zone, which means that Lulu is now started moving in the right direction. Okay, so very interesting. I'm not sure if you guys hear a collection of noises, okay, but we have just started with some Chinese celebrations in my area, and they are doing massive fireworks on the street. So hopefully it's not too disturbing, guys. But anyway, so let's continue the session, okay? And So I was saying that, we had an opportunity some time ago to enter Lulu. Maybe you are in this trade, and Lulu now is back in business. Okay, so again, Lulu is providing 51% opportunity in the using pre and post market data with regular session. 51 becomes 52. Now, having said that, I will say that entering Lulu at this time is still okay, still correct, but normally when Lulu goes up is for 9 candles. We normally round up to 10, isn't it? And then we take 50% of 10, which is 5, so you can go up to 15. We are already in candle number 9, so you are still okay entering this trade, but this is the time to now enter this trade with half of the position size, because based on your climate understanding, okay, we had already some propagation, some expansion of that climate, okay, for many candles, for not really many, but for multiple candles, and therefore to manage and mitigate your risk, it would be recommended, okay, it would be recommended that you go ahead and you reduce the size, okay. Ruben, I'm using 1,597 candles for the stats, and also I'm using 61.8% for the parameters of AutoUFO. So if you were to do that, we should have exactly the same parameters. The reason for using the 200 strike on Lulu again was because that market, if I'm not mistaken, was about to start making all-time high. So we had no target, okay, and therefore we're looking for an option with around 30 delta, which is normally the rule that we shoot for, okay, and that was the one. Okay, great, perfect. Okay, so now with Lulu, I'll do it very quick. I mean, I think this we can look at other trades. We don't need to look at Lulu specifically, but just very quick in case you want to either re-enter this trade if you didn't enter before, or you want to plan it yourself. So 194 is the current value for the average. Okay, 194 is the current value for the average, and okay, yeah. So the market just opened, so Lulu is now moving. So 194 is the current value for the average. Okay, and we do have a green UFO at 194. Okay, so you can certainly plan a trade with Lulu where if Lulu was to drop into the green UFO, you would then go ahead and take it. Okay, guys? So all good for this one. Okay, and I will leave you plan this one since we did it before ourselves for that very same stock just a few days ago. Okay, so what I'm going to do, the market just opened, so I'm going to go back to the trade with STZ and validate the plan and see if we can execute this trade and enter it. And then I will go back to the world of directional trading and keep looking at other trades as well, okay? Cool, so what do we have? Okay, well, funnily enough, in the pre-market, that stock was trading like 0.85% up, but now that the market just opened, it seems to be that stock it's actually down by 0.04%, so it's quite interesting. So anyway, oh, by the way, Ruben, I'm just realizing that I changed the setting for STZ to October 2018 and I never got it back to 1597, so that may be the reason for you to have different stats compared to mine. Okay, so sorry for that, I'm just realizing that's the case. Cool. So back to the analysis tab, we are dealing with STZ, confirming the standard deviation values. 222 is what we have on the top. Okay, I'm gonna have to reactivate my October date so I can get to see those UFOs on the screen. So 222. Well, actually, if 222 is the new value, okay, since that stock was supposed to be 1% up, isn't it? But it's not. So 222, 223 is the new value. So actually, we can plan this trade instead of using the 230. We can actually plan this trade using 225. So we could do 225 to 27.5, which is gonna give us a higher level of premium. Okay. So we're gonna do that. I'm gonna check that on the option chain in a second. And then on the bottom part, I guess we'll still be using the 187, but let me check. So we got 192, okay, 192. So yeah, so again, 192 is somewhere here, and therefore we have to use the 187.5 because it's where we have the nearest UFO, okay? So basically, we are planning on that stock to remain range bound between that green UFO above, sorry, that red UFO above and the green UFO below. That's the plan. Okay? So, you already have one. Very nice job there, dear. Very nice. Okay, so let's go for it. So let's begin with the call side. We are again. I remind you that we are looking at October 4. I want to check very quick the 225 on the 27th of September. Yeah. So it's giving you 8 cents, which is not enough. Okay. So reconfirming this, we cannot use September 27. So using October 4, the 225 would pay you 75 cents. So that is certainly more than 35. And the 187.5 pays you 123, which is also better than the minimum we need. So let's go ahead and insert all those parameters. So 227.5 and 225 for the call side. Using October 4, important to always double check all those columns to make sure you make no mistake. And then on the put side, we're gonna go for 185 and also 187.5 for the option that you sell. Okay. If you were to do this at market price, notice that it seems that this iron condor would pay 40 cents. Okay, that would be the premium collected by doing this iron condor, and as long as the stock remains in that range, then you will be absolutely fine and make a profit. But that's not good enough. We need to double check that our rules are properly met, which I believe they are, but I just want to bring the rules to the main screen just so everybody is with me, because some of you have spent a lot of time with me in the sessions, but some of you are newer to the sessions, and I want to make sure everybody is focused. Okay, so notice that we have a very important rule when it comes to doing credit strategies. Okay, so we always want to look at the premium collected and compare these to the risk attached to the trade, which basically is the distance between strikes. Okay, and in this case the distance between strikes, it's $2.5. So on the bottom part, from 185 to 187.5, you have $2.5. On the upper part, which is 225 to 227.5, you also have $2.5. So the risk attached to the trade is $2.5. And what we want to make sure is that the premium collected is at least 15%, as you can see on the notes, 15% of the maximum risk, which is $2.5, as I just said. So how much is that? That is 37 cents. Okay, and how much are we being paid? 38 cents. Okay, so it's valid. Okay, the trade is valid, and the trade is to be executed right now if you do need a non-directional trades in your account. Okay, so this is a valid trade. So I'm just gonna execute it. Okay, but also notice how it's looking like some of those legs are not so liquid. When you look at the bid being 85 and the ask being 5, it's really telling you, you know, something. It's you know, a little imbalance here. Okay, and notice now it's 42 cents. So these things keep changing based on the current liquidity available in the market. And I would like to identify where the problem is. And the problem number one is here. So the lack of liquidity on the call side is making the premium you would collect from the call to be the same amount of premium you would collect from the one you buy. So you sell it at 55, you buy it at 55. So basically it's killing each other, right? And on the put side, you have 115. It's also killing each other. Okay, so you can see STZ does not have extremely liquid options. Okay, in one hand, you will want to give up and say, okay, I'm gonna pass on the trade. But remember, precisely in those stocks that are not that liquid, many times, the market makers are not doing too well from a business point of view, because the fact that they are not so liquid means that they don't have too many trades. And therefore, market makers cannot take advantage of customers in the form of arbitrage and commissions and other things they do. So often they would surprise you on the price they are happy to give you when doing those trades. So if you're gonna execute this trade, okay, you would want to click trade, and certainly never, ever, ever use a market price to get this trade, especially because you know you will get zero, okay? Natural price is zero, so never, ever, ever do that, okay? But when you go to limit, okay, you would expect 42 to be maybe too good to be true, because getting the midpoint, it's often quite demanding, especially if you go with 4 legs at a time in one shot, okay? But again, those stocks, at least this is my experience, that many times you get the nice surprise and you do get the fill, okay? So I would recommend to do that, okay? So I would shoot for 42 cents, which is the very midpoint for this trade, and I would just click now, place order, and just go for it, okay? That would be the approach for this particular trade, okay? So go ahead. I'm not gonna do it because in my case, as you know, I will need to do it at a market price, and if I do it at a market price, I will get nothing. So I'm certainly not going to do it for nothing. Okay. But in your cases, look at that. We just got 45. So again, you very likely, if you are patient, I would say you are very likely going to get filled at those 42 cents. Okay. So if you're gonna be placing that trade, go for it, okay? All earnings is on the 3rd of October. Okay, well, if that's the case, I'm making a mistake here. Wow, you know what? I got confused. In my mind, I thought it was October 22nd. Okay, so guys, I am sorry to say, but this trade is now invalidated, okay? We cannot do this, okay? We cannot do it because earnings are happening before earning. Let me say that again. Earnings are happening before expiration. So we cannot do this. Okay, earnings happening before expiration, we cannot allow this. My bad. I believe the prior case we looked was October 22nd, and that's the figure that stick to my mind. So good catch there. Good catch there, Al. And earlier I was talking about being efficient with my time. Well, not the case in this one, okay? So sorry for that. So let's go back to non-directional trades and let's keep working on the plan. So next one I would like to check is Nike. So checking Nike, I am back, guys, sorry for that. So Nike, NKE. So NKE has earnings on the 25. Remember, next Friday is going to be 27, so it's not going to work. What about Merck? So we're going to look at MRK. That is normally a nice one, a biotech company. Those ones, it's kind of like the opposite of Pepsi Cola or Coca-Cola, as I said, because they are biotech companies. They almost always got some hefty premiums. So October 29 is the case that we have with Merck. So here, these really give us options as long as we got the UFOs we need. So the UFOs here are giving us 55%. If we move from regular session to pre-post market, it becomes 47, so that would not be good. So looking at regular session, let me see if I look at daily, where are we at? Because I believe that market is about to begin making all-time high. I believe that there was a time where I did loaded data in the past. Again, it's so many charts and so many trades that sometimes I get confused. But okay, let me do it again, just in case. So this data here was from 11-2000. Okay, so here's how you do it. Okay, because remember, if you load too many charts, if you load too many candles on your chart, AutoUFOs may struggle, because of too much real-time data to be processed. Okay, so what I'm gonna do is I'm gonna switch now that I have disabled AutoUFOs. I'm gonna switch now to 11-2000. I'm gonna do October just in case. So I'm loading data all the way to October 2000. This may take a while but I need to check if I do have UFOs there or I don't, okay? So now that I have done it, I'm just gonna type .offl, which is gonna make my TradeStation to be offline. And then I'm going to now go ahead and activate AutoUFOs to see if I have UFOs above, and I do. Okay, so we got 54% with pre and post market, and I have, sorry, with regular session, and I have pre and post market giving us, okay, calculating studies, come on, 45. So 45% is obviously less than what we got with a regular session. Okay, so that's gonna be my choice. Okay, and knowing that this is my choice, now I'm gonna draw these horizontal lines, okay, where the UFOs are. I'm just gonna make those lines to be red colored, so I just know that they have to do with the red UFOs. Do I have anything else above? No, I don't have anything else above. Okay, so now before I get back to be online, okay, I would want to go back to the normal count for the bars. Okay, so when I process AutoUFO, it's not gonna make my TradeStation struggle. Now I'm left with my horizontal lines, even though the UFOs are gone, because I have loaded less candles. And now I'm gonna go with .onl, which is gonna reactivate TradeStation to work online. It will ask me to retype my password, and I will do that to reconnect. Okay, so just working on it. Okay, we got it. So now, what do we have? Okay, so okay, we have green UFOs below, very, very far down, and only one UFO below that is close by, and the other UFOs. So yes, if you measure the distance from here to here, okay, and you project it to the bottom part, notice how those UFOs are so far down. Okay, so this trade is likely not going to work well because of that reason. Okay, I will need some UFOs, but again, just keep an eye on it. Okay, keep an eye on it, because what may happen anytime, could be later today, is that some new UFO forms. Okay, so maybe we have something like that forming here. Okay, with a beautiful UFO here. Okay, and you know, so what happens is that now you have one green UFO, another green UFO, and then you have multiple green UFOs above, and that may be the range that you could trade and capture with an iron condor or something like that. Okay, and this should be a trade that works, but you do need to wait for a new UFO to form before you do it, because having only one UFO to defend yourself will not be seen as enough based on prior sessions that we have conducted together. Okay, so what else do I have? CL. Okay, that's gonna be another potential trade. So looking at earnings dates for CL. So CL, Colgate-Palmolive. We have next earning report on November 1st. So we got plenty of time. So what about the stats are 53%. That's looking good. If we do pre and post market, instead of 53, it becomes 49. So we're gonna go with the 53 and regular session. And now we're just gonna do what I did before, which is without even thinking, type CL. Okay, type CL. Getting into the option chain, we're gonna start with September 27. Shorter the expiration, the better. So analyze and sell an iron condor. And we're gonna change the settings to plus 1 standard deviation above and minus 1 standard deviation below. And this basically, as we did before, using September 27, is telling you that stock is likely to move between 69 and 73. So where is 69 and 73? Okay, well, 73 is kind of here. So we cannot use that UFO, we need to use the one above. And 69 would be located around here, somewhere here, which means that we cannot use that UFO either. We need to use those UFOs. Okay, so that's putting this range to, you know, to be quite wide. Okay, so I have a little bit of a concern here. We'll see if this is gonna work, because basically we would be leaning against the 65s and the 75s. So what I'm gonna do is look at the option chain, look at the 75 using 27th of September. I only get 4 cents. Remember, in my mind, I'm looking at 35 minimum. So I'm gonna look at 4 of October, paying you 10 cents, not working. I'm gonna look at October 11, paying you 11 cents, not working. I'm gonna look at October 18, and the 75 is now paying you 23, not working. The very, very, very minimum is 25. So if I was to look at 25 of October, I get 32, which may be okay, as long as I got enough premium on the bottom part, okay? But again, now looking at an iron condor of 36 days, I'm not gonna say it's wrong, but I do have a concern, which is that now, based on probabilities, if I change this to October 25, that's the one I have, right? October 25, yes. So this is gonna bring now my range to be 75.6 and 66, which you can see how 75.6 surpasses 75. Okay, so it's looking like we have a trade, but we don't. Because basically we are not having premium enough built in those options to justify the trade. Okay, so basically we are left with one opportunity. Wow, you know, the market has been not so nice, giving us so many no's, isn't it? But that's what it is. So we have AEM, it's a $57 stock, and we got 53% probabilities. If I do pre-post market, we're gonna have 41, so we will not do that. We'll stick with a regular session. And I'm gonna do the same with AEM that I did before after I confirm the earnings dates, which don't show for AEM. That's interesting. So AEM, there's no information about earnings, okay? Okay, so I don't want to trade and be blind, and therefore I'm not going to plan the trade. It's a shame because we have multiple UFOs above and below. Okay, so if you have any market data, let's say you have Think or Swim running and you can get real-time data for earnings, maybe you want to plan this trade on your own, okay? Okay, Ruben, if you are using different versions of TradeStation, you may have different values for the standard deviation. Make sure you're using the same I use, okay? And if you use a different one and you have a different value, just go what you have, okay? But just know that TradeStation has changed the process they have been running to calculate those values as they have evolved and develop new versions, okay? So we're gonna continue our analysis with directional trades, okay? We almost had an opportunity with Facebook. I would like to revisit that just in case we had a new green UFO forming and we didn't. So the average is 187.6, okay? And we don't have a UFO, but again, just watch for it because it may happen anytime, okay? So what else do we have? Let me see, we're gonna be looking at, yeah, we talked about the Lulu trade as well. I'm just gonna flash it very quickly. Yeah, so actually price went down and price is in the UFO, okay? So if you want to enter this trade, this is the time because you are in the climate, you are lining up with the average, as you can see, you are inside of the UFO. So this is the time. And just to save time, I'm just gonna repeat myself, this trade, which is flashing a little bit of red for me now, because of course it went down in today's session, isn't it? It went down by 1%, so that's why earlier it was green, now it's red on my account, but it's okay. We are in the right climate and everything, so we'll let the trade happen. So remember, I am using the 210 call using December expiration, okay? And this will be the same one you will want to use if you want to take this trade, and remember, this is the time. So if you need a long trade in your account, just take Lulu right now. That's option number one. But let's look at more options. What else do we have? DD. So we're gonna be looking at DD. So what is this market giving us? Well, we are not gonna take it. Climate is 14 candles into a climate that is normally 4.5, let's call it 5. Okay, so we are way overextended, and even though something irrational can stay irrational for long, from a probability standpoint, entering now is not ideal. Okay, so we are not gonna enter this trade. CVS. Let me see what's going on with CVS. So similar setup. We got 14 candles going up when normally it goes up by 5, okay, 4.59. So again, too exaggerated as a move. We need some sort of a correction, you know, a temporary change of climate, like for example here, to then begin with a new expansion, okay? And therefore entering now, it's, could be done, but it's not ideal. It's not on your side because of what I just said. Okay, so what about Bristol Myers, BMY? So with Bristol Myers, we have such an extended climate of 17 candles where normally it's 5.6. So same situation. Okay, so we're not gonna do it. BHC is giving us a situation with 10 candles out of 7.3, let's call it 8. So 8.5 of 8 is 12. So 10 out of 12 is okay. So if we do have a proper setup, we will take the trade, okay? But again, we'll take the trade with half the size because this climate begins to be a little too over propagated, if you wish, okay? So, okay, I'm just waiting for the full thing to load. So what do we have? Average is 23. The current price is 23. We are inside of a green UFO. Probabilities are 55. If I look at pre-post market, probabilities are 38. So certainly regular session is the way to go with BHC. And therefore we have a trade to be planned here. Okay, so let's set the target. To set the target, I'm gonna use the common time frame, enable my AutoUFOs, and switch to weekly. The moment I switch to weekly, this is telling me that the right target to use is 2461. So 2461 is the right target to use. Okay, this is for BHC. So now that I know my target, I'm just gonna go ahead and disable AutoUFO, go back to daily, go back to normal. And now I'm gonna go ahead and look at my option chain because most of the work needs to be done here now. So loading BHC. Earnings for AM 1023. Okay. So then, you know, it seems to me that a trade could be planned on that stock, okay, Al? So BHC, we are looking at the collection of potential options to be used here. We have the option chain loaded. Before we do that, I also need to calculate my time to target so I know which expiration date to use, isn't it? So I'm gonna be using my calculator here. I'm gonna look at what the target should be, which I said was 2461 based on what we saw on the weekly time frame. If I was to look at the current price, which is the entry, which is 2303, we are talking about $1.58. Now, enabling average true range will tell me more about the expected time to get to this target, because 1.58 is the distance to travel, but that stock travels at a rate of 64.36 cents, which is the daily ATR. And remember, we assume that we will net a 1 daily ATR each week. So therefore, that means that it should take 2.4 weeks to get there, being each week 7 days. We are talking about a 17-day trade. So 17 days to expiration we do, but also to mitigate the effect of erosion from time decay, we will want to also make sure that we use an expiration date that lines up with earnings, because options tend to expand their value into earnings. So I am looking at BHC, and this is something that doesn't make me too happy for the second time, which is the fact that I don't get information about BHC for earnings in the Yahoo page. So I'm going to look at Whisper numbers. I'm going to look at a different website to see if I can get that information. I'm not too keen on using this website because I've seen outdated information that didn't update on time. But in this case, I would say it's not critical. It's not like when you are selling options, which is critical. In this case, I'm buying options, so it's not critical. And by the way, since we're getting close to the top of the hours and we need to conclude the session soon, maybe Al, you can help me. Earlier, you were revealing to us the earning dates for AMD. Did you check AMD or was it AMO? Oh, Dirk, that's very nice of you. I'm having a problem here with the website not loading for whatever reason. So I'll go with your value, Dirk. Thank you so much. November 5 is the earnings report. So if I look at November 5, which we don't have, we have November 1. Okay, so November 1 is the only expiration date unless we want to go for January 20. But notice that you would basically multiply times 3 the expected duration for the trade. Okay, so we're not going to do that. We're going to use November 1st. Okay, and we will then right click to analyze and buy a vertical spread so we can do a little further analysis in here. Okay, so the only thing I need to know is what are my Greeks at entry, which is 2303. Okay, and the type of trade we're going to do is a debit spread, where you will buy a call and sell a call. Technically, it's called a bear call spread, right? And you will want to sell calls above 24.61. Okay, so we're gonna start with a 25 call, and then you will want to buy calls. Okay, buy calls that are somewhere in the middle, where you are provided with around 30 delta, and certainly you need positive gamma. So let's take a look. Okay, let's take a look. If I sell the 25 call, okay, knowing that my target, okay, my entry is going to be 2303, but my target is going to be 24.61. If I sell the 25 call and I buy, let's say, the 22, that gives me 41 delta, which is too much. So remember, I said the current price of the stock is 23. I want to use options anywhere in between the current price and the target. So between 23 and my target, okay, I got 23.5 and 24 and 24.5. So if I pick 23.5, I get too little delta, which means that I need to go down. So if I go down, I got 26. Now if I go down lower than 23, then I'm buying an option below my entry. It will give me a delta I want, but this is not what I said. I said it needs to be where the current entry is and anywhere between the current entry and the target. So that forces me to push my target to a higher value, for example, 25.5. If I do that, now I got the delta I want. I got my delta of 30, which is the goal. But I also have a gamma, which is positive, which is also the goal. But my gamma at the target becomes negative. So what do I need to do? I need to move my option further until the gamma at target becomes slightly positive or neutral. And it seems that I accomplished that when I get to 27.5. Okay? Now if I do that, now my delta became 46. So that means that now I'm going to have to push up my option to 24. If I do 24, 27.5, I got the delta I want. I also have positive gamma in both the entry and the target. Okay, and therefore this trade would now be valid. Okay, the cost of the trade at entry would be around $65. Remember, it's time to take the trade because the current value of the stock is 63.2. So you can go ahead and take the trade now, knowing that for each contract you execute, you would be risking around $64. Okay, so depending on the risk you want to take on your trade, you would decide to take one or more. So I'm going to go ahead and enter the order. And by the way, whatever risk you want to take, make sure it's half. Okay, make sure it's half, because going back to the charts, remember, we said we are a little late in the climate. It's still okay, but to mitigate the risk of being a little late, you will want to use half the size. So in my case, I'm just gonna keep it simple. I'm gonna go for half. I'm gonna go for market, so I get filled immediately. Place order, 1, 2, 3, yes, that's it. I'm in.
Order filled.
I just got filled, so I have a trade in the system, and that's it. Just to make sure everybody's with me, I'm just gonna write it on the chart, so everybody has it. In the end, what we did is to sell the 27.5 call. We are using the expiration date November 1st. November 1st, 2019. Okay, and the call we decided to purchase was the 24. This again would cost us around $65 per contract, and you are in. Anyway, so this takes us to the end of the session, my friends. Yeah, a little struggle in the last two sessions to get some premium for the non-directional trades. Looking at the VIX very quick before we conclude, we can see the VIX being down by another 2% today, so 13.62. Okay, so the VIX is going down. Of course, this reduces the premium of the options, and that's the reason why we are struggling to do the non-directional trades. Okay, but it's good for the directional trades because we find more opportunities with lower price options. So again, you keep playing with your scanner with whatever opportunities are available in the market as we speak, directional, non-directional, debit or credit. Okay, and that's how you keep balancing out your portfolios and creating stability in the results that you achieve. Okay, but anyway, super pleasure to have you with me today, guys. Thanks for joining me. Keep up the good work as always. Loving your emails, loving your comments and the teamwork. And again, keep up the teamwork. Keep up the good job. No matter if you're watching me live or recorded, which I know many of you do as well. Okay, so take care, everyone, and see you soon. Bye bye.